For the last few months, I published a ton of bearish content in regards to Tesla, but I want to provide a friendly reminder that I am still bullish for the long term. It's just that for the last few months, I haven't been too optimistic to scoop up more shares, as I stated that there was a lot of pain coming to Tesla. And indeed, we did see a lot of pain, and I still believe that there's still a bit more pain to kind of get squeezed out of Tesla before we see a bit more of an upside. I mean, remember guys, back in December 28th, I made a video highlighting how Tesla was overvalued from a fundamental perspective. I also highlighted that the macroeconomic environment wasn't the best for Tesla, and it was also overvalued from a technical perspective, and a lot of people kind of geared this hate towards me, like I was this negative, pessimistic Tesla bear, but the reality was that I didn't want to add more shares at the top, and I said that pain was coming, and indeed we did see a lot of pain from where I initially said that. And of course I lost a lot of subscribers talking about this. People started sending me negative DMs and comments, and it is what it is. But this video is a bit unique, as I actually have something positive to share and kind of remind everyone again why I'm bullish for Tesla and why you may want to kind of reconsider your views on Tesla. Now, we have this piece right over here from the Wall Street Journal, and yes, I like paying a little extra to get the paper. I know you could just get the article online, but I like kind of having the analog piece of content, right? It's kind of like books. You could have the audio version or the PDF version. I like having something tangible to read. Again, that's just me, right? But this article right over here, or this headline, "The Electric Car Revolution is Losing Its Charge." By the way, it's a great title, and on the surface, it may seem pretty negative for Tesla, but contrary, it's actually pretty positive for Tesla. In fact, if you kind of parse through this article, it highlights how companies like Rivian, Lucid, and Fisker are burning through their cash reserves as they spend heavily on expanding factory production and sales, all while losing money on every vehicle they sell. Right? They go on to say that for EV automakers, a slowdown in demand starts to clock that might determine how long they could keep the lights on. Now, this story sounds similar to what we're hearing with the legacy automakers, but it's much more worse, right? We've heard how the legacy automakers are trying to transition to the EV space, but they're losing money. But guess what? At least the legacy automakers have some profits that they could kind of lean on, like their ICE or their internal combustion vehicles, their gas-powered cars. But these other EV companies, they don't have that to lean on, right? And so if you actually go through this article, they say that these young companies that went public at a stratospheric valuation, even though they had no revenue and little experience building a car, fooled a bunch of investors, analysts, and ordinary shoppers to believe that EV makers could emulate Tesla's success in disrupting the traditional car market, right? But that has not been the case, and we'll go ahead and talk about where these other EV makers are, and also compare that to Tesla, and also talk about where we see Tesla going forward, and kind of just talk about the potential risk. Now, it goes on to say that these companies are fighting to stay afloat amid stiff competition. And honestly, I find it crazy that a lot of people were so optimistic about these other, EV companies. I mean, it kind of goes to show that people don't look into the fundamentals of companies, right? They don't look at the balance sheets or the cash flow statements or the income statements, and that people just buy whatever they see on the headlines. I mean, if you take a look, let's take a look at Rivian right over here. Rivian is down pretty bad. I mean, it's down disgustingly bad. And if you actually take a look at pretty much the earnings and revenue history, it's not that hard to tell why. I mean, yes, some people will say, oh, well, look, the revenue has went up from, 2021 to where we're at now. But you know what else has went up? You know what else severely went up? That is the fact that their earnings have went down. They're not making money. Their free cash flow suggests that they're burning more capital than they earn, and that's not a good thing, especially in a high interest rate environment. Yet you have often a lot of people saying, oh, well, Rivian is a steal at this price. And again, you guys are free to do whatever you see value in. If you want to buy shares of Rivian, by all means. I personally am not interested. But again, I always try to preach that you should never copy whatever I do. Am I beating the market year to date? Yes, but does that mean that I'm going to be successful towards the end of the year? No one knows. At the end of the day, you should take responsibility and, pretty much own up to whatever you see value in. It's kind of like the idea that you should never copy anyone because you may be copying their failures. And the good story about this is, although I'm doing well in the market in regards to my timing with Tesla and where I'm actually allocating capital to, I remember back in college, this is where I first learned your lesson, where I had this business law class too that I had to take, and there was this individual next to me who seemed smart, super bright, and at the time was having some, just issues with life, and keeping up with class was a bit difficult. And so I ended up copying, I probably shouldn't say this in the video, but I ended up copying this, this guy right next to me to pass this test, and I failed miserably. And I was like, how? This guy, he sounds smart in class. And that was just a reminder that you should never copy what anyone else does. If you're gonna succeed or if you're gonna fail, you do it on your own merit, right? You should never just follow whatever anyone else does, and that kind of translates to the market. So yes, have I been making these updates on Tesla and kind of saying that I'm not buying? Yeah, but that doesn't mean that you can't buy. If you see value in buying Tesla right now, then by all means. I just want to share my perspective on why I'm not that optimistic on buying now, but why I'm optimistic later. And again, let's go ahead and look at some of these other EV companies. Let's actually take a look at Lucid, right? Lucid is it's way worse. I mean, one of the things interesting, I think Lucid is probably one of the worst ones to kind of look at, especially because when you look at the price to sale ratio compared to Lucid, comparing Lucid to the other competitors, Lucid is severely overvalued. So Lucid is probably one of the worst ones out there. But again, you have some individuals who will say, oh, well, this is the underdog, and I'll go ahead and I'll put capital into Lucid, especially because right now Lucid is about at like $2. And so, is that correct? Yeah, $2.50. And so someone, there's probably someone watching this video or someone out there saying, this is a steal. And if you believe it's a steal, then by all means, do it. But I don't want to invest in something that looks like this. I don't want to buy shares in something that looks like this. And me personally, I just want to avoid that. Again, could it be the underdog? No one knows. No one has a crystal ball. But one of the things we're seeing is that we're in this high interest rate environment, and these other EV companies are not doing too good. At least Tesla could kind of slash its prices and afford it. Yeah, is the stock going down because of that? Yes, but it's still able to keep afloat. And we have to understand that Tesla financially is pretty healthy. It has a large amount of capital. If you take a look at the free cash flow, it's looking pretty well, looking pretty strong. And that's why I'm bullish, right? Because we know that there's government intervention to go ahead and make sure that EVs become one of the primary types of vehicles in the next few years. And the company that's best suited to kind of thrive in that environment is Tesla, right? A lot of the other even legacy automakers, they're not even close. And so we know that the push is coming. And so it's just a challenging time for Tesla. But my view is that once these hard times come, because everything's very cyclical, right? Everything's cyclical. Once the hard times are over, well, guess what? Then we have party time, which is going to be coming pretty soon, and we'll go ahead and touch on that. But Tesla has a lot of capital that it could invest into robotics, which, by the way, I haven't really underwritten that into my valuation for Tesla. Just can't really put the underwriting that valuation into its robotics space, but once you can, I mean, Tesla is suited to be an absolute beast in this field. Now, I also want to touch on something else, and that is the fact that currently, right now, I have a mega sale to join the Push and Profit private group where every single day the markets are open. I provide a overlooking briefing on the broader markets as well as sharing trade ideas. And so if you guys are interested in hearing about some of the trade ideas, like our most recent one, which was Geo, where we talked about entering in Geo around this area of $12.48, and in the last 10 days is up over 17%, then make sure to check out that link in the description below. I mean, it's fairly cheap for the first month. It's only about $14 to join, and you could cancel at any time. But with that said, let's go ahead and kind of go back on tangent and talk about Tesla. I just wanted to provide that because I know some individuals are interested in getting those daily briefings. But if you're not, by all means, it's completely fine. You just want to know what's going on with Tesla and why this is bullish. Well, this is bullish again because the other EV makers not looking too well. not looking to go well. And although Tesla, in comparison to its other, to its constituents in the S&P 500 has been performing terribly bad, it's still doing much better than its competitors in the EV sector. And so that's good. And we know that Tesla also has some, tricks under its sleeve, such as FSD coming into fruition pretty soon. I mean, have you guys seen the updates on that? It's looking absolutely crazy. Now, Teslas are able to successfully navigate roundabouts in the rain. So that's something, again, I still haven't underwritten that as well. I know there's people like Kathy Wood who, in their evaluations, they're putting in robo-taxis. I'm not even factoring that in. I'm just looking at Tesla from a car company and then just optimistic of what it could do in the future. But, pretty much robotics and robot taxis, that's just a bonus in my valuation, which is why I don't come out with these crazy valuations like everyone else. I don't say, oh, Tesla's going to go to the moon, because, again, it's still a bit of speculation when you're trying to figure out if they're going to successfully do well in the robotic space. But at the moment, they're in the lead, as well as FSD. They are in the lead. And so it's likely that they will be successful, but we don't have concrete evidence that, it's something that you could underwrite at the moment. But again, pretty optimistic with that. But with that said, I want us to go ahead and hop into my laptop. This way we could kind of just take a look at Tesla from a technical perspective and highlight a couple of reasons why I'm not that optimistic of scooping up more shares despite it falling down tremendously. Alrighty, so we are officially in my laptop taking a look at Tesla, and I want to go ahead and address one of the comments and messages I get very often, and that is, hey Justin, it's not about timing the market, it's about time in the market. And that is absolutely correct, right? I always say that it's about time in the market, but that doesn't mean that you should throw your capital willy-nilly, right? I have a lot of individuals that have been saying, I just been buying every single dip on Tesla, and that's fine. That's, of course, to each your own. I haven't sold my Tesla, but instead of buying all these dips without confirmation of an uptrend, which I think is kind of a little bit crazy to do, I bought the stocks that had confirmation of an uptrend. For example, NVIDIA was one of the stocks I called out for those within the Push and Profit private group. You know what that is up? Pretty much year to date. Let's go ahead and try to get it as close to the first to where we're at now. Over 100% year to date. Yes, you heard that right. NVIDIA is up 100%. This is what I've been adding into the long-term portfolio. Took a couple swing trades in the trading account with it as well, but in the long-term portfolio, been adding a bunch of NVIDIA. Been slowing down on NVIDIA, but also added a bunch of just more exposure to the broader markets like the S&P 500, especially when it had those dips around every single time we had the CPI report. As I kept telling the individuals within the Push and Profit private group that the CPI report came out hotter than expected, but inflation, the trend of it was still going down, and that the CPI reports were misleading because it didn't have high frequency data. It had lagging data, and in fact, we are seeing shelter, rents and rents equivalents go down, which actually shows us that, yeah, inflation, the trend is still going down. And so, while a lot of individuals were buying the dip on Tesla, I was deploying capital in other areas, and that's why still year to date, I'm pretty much doing much better than those who are, just adding into Tesla. Again, it's not about timing the market. I'm not buying and selling out of my long-term position with Tesla. That would just be silly from a tax perspective as well. But I just been holding off. And so the question is, well, Justin, when do you plan on buying more shares of Tesla? Now, again, you guys don't have to copy me, just, stating my, views on Tesla. And it's about just that confirmation. Now, in the past, I said, look, when Tesla closes above, and let's go ahead and switch this to a line chart, is that when Tesla closes above $204, we never had Tesla close above $204 to suggest confirmation. And I said, look, over here, there's a little volume relative to price. So if we close above $204 and there is little volume relative to price, and there's buying pressure, well, we could see Tesla shoot up, and I think that's an appropriate area for me to go ahead and deploy more capital. We never got it, and so I never bought into Tesla, and people thought I was foolish when it was at $204 when it closed there. Ended up falling all the way to $161, and then I updated it. I said, look, I'm no longer going to wait till 204. I'm going to wait till 200, and the reason why is because obviously you have to update where you are in the market as the market changes, and one thing we have to understand is right over here, now there's a lot of volume relative to price. And so for me, what I'm waiting to see is, well, if we close above 200, well, now we're finally closed around over here. And the reason why this is a problem is because when there's a lot of volume relative to price, again, I say this very often, there's a lot of exchanging between buyers and sellers. And so Tesla still has this resistance over here that they have to break out of. Now, once they break out of that resistance, that's kind of the signal for me to go ahead and add more into the long-term portfolio. Does it mean that it can't go down afterwards? No, I don't have a crystal ball, right? But that's what I'm waiting for Tesla, for me to wait for that confirmation, because at least it's a better signal to go ahead and add in than simply just buying every single dip. Then let's go ahead and switch to a candle chart. If it does indeed go down even lower, I'm also monitoring this area around the 150s, right? Because there's this gap, and I'm waiting to see if Tesla fills this gap, and if it does, if it bounces up. So that's pretty much the view on Tesla, and that's why I haven't been, again, adding into the long-term portfolio. Again, by all means, you guys do whatever you see value in. Now, in regards to trading, again, I also haven't been trading Tesla, right? Because investing and trading are two separate vehicles. As far as trade ideas go, I've been pretty much all over the place with several different names. We talked about copper. I probably shouldn't talk about all the trade ideas that we talk about in the Push and Profit private group, because it should be exclusive. So I'll just talk about copper. Copper was a great one, ran up. Gold was another one. Earlier in this video, we talked about Geo. Where Geo was another one. We're in 10 days up 17%, which again, if you guys want access to the daily briefings and also where I share my swing trade ideas, make sure to check out the first link in the description below. $14 to join for the first month, and again, you could cancel at any time, so definitely check that out. But you guys let me know in the comment section below, have you guys been buying the dip on Tesla? But again, I'm it's your capital. You do whatever you want to do. I'm not saying that's bad. I'm not saying that's good. You guys just let me know. What have you been doing with Tesla in the long-term portfolio? And do you guys believe that we are going to start seeing this reversal with Tesla once we start getting those interest rate cuts? Because we know Tesla is an interest rate sensitive company. And so I'm curious to hear your perspective on it, as well as what's your ideas of Tesla going forward with AI and robotics. Again, love to hear your comments. With that said, guys, I'm not going to make this video any much more longer than it needs to be. But before you guys go, consider also checking out this video right over here. And I'll see you guys on that next video. Take care, guys.